Ever wonder how tax credits could save you money? Welcome to a world where tax isn't always a daunting word. Now, imagine a system where instead of constantly giving, you get to keep a bit more of your hard-earned money. That's the beauty of tax credits. They're like the superheroes of the tax universe, swooping in to save your day, or at least your wallet. Tax credits, although often misunderstood, hold the potential to significantly reduce your tax liability. They're not merely a reduction in the amount of tax you owe, but a dollar-for-dollar deduction that directly lowers your tax bill. It's like finding hidden treasure right in your tax return. Whether you're an individual taxpayer or a business owner, knowing how to navigate the complex labyrinth of tax credits can be a game changer. So, let's dive in, shall we? This video will unravel the mystery of tax credits, making them easy to understand and apply. First off, what are tax credits? Well, tax credits are a form of tax incentives that allow taxpayers to subtract the amount of the credit from the total they owe to the government. In simpler terms, think of tax credits as a gift card from the government that you can use to pay off your taxes. It's a dollar-for-dollar reduction in your tax bill. Now, let's break it down a bit. Let's say you owe $2,000 in taxes and you qualify for a $500 tax credit. This means you can subtract that $500 from your tax bill, bringing it down to $1,500. It's like having a $500 coupon to offset your tax bill. But wait, don't confuse tax credits with tax deductions. While they both reduce your tax liability, they do so in different ways. A tax deduction reduces how much of your income is subject to taxes, whereas a tax credit reduces your tax bill directly. Think of it like this. A tax deduction is a discount on the price tag, while a tax credit is a direct payment towards the bill. To illustrate the difference, let's say you earn $50,000 a year and get a $1,000 tax deduction. This means you're only taxed on $49,000 of your income. On the other hand, a $1,000 tax credit would reduce your total tax bill by $1,000, regardless of your income level. So, tax credits can be a powerful tool for reducing your tax liability. They can help you keep more of your hard-earned money in your pocket. However, it's important to know that not all tax credits are created equal. Some are refundable, which means you can receive money back even if your tax liability is zero, while others are non-refundable, meaning they can only reduce your tax liability to zero, but not below that. Now that we know what tax credits are, let's delve into how they work. Tax credits can seem complicated, but they don't have to be. Let's break it down together. In essence, tax credits are a tool employed by governments to incentivize certain behaviors, like purchasing electric cars or installing solar panels. They work by reducing the amount of tax you owe dollar for dollar. Imagine your tax bill as a grocery bill. You filled your cart and come up to the cashier. The total is $100. But wait, you have a coupon, a tax credit worth $20. So you hand it over and your bill drops to $80. That's the magic of tax credits. Now, there are two main types of tax credits, refundable and non-refundable. Let's start with non-refundable tax credits. These are like that $20 coupon. If your grocery bill is only $15, you can use the coupon to pay it all off, but you won't get the remaining $5 back. Similarly, a non-refundable tax credit can bring your tax liability down to zero, but no further. Any excess credit won't be returned to you. On the other hand, refundable tax credits are a bit more generous. Let's say you have a $50 refundable tax credit and your grocery bill is only $30. Not only can you pay off your bill entirely, but you'll also get the remaining $20 back. In the tax world, if your refundable tax credits exceed your tax liability, you'll get a tax refund for the difference. Remember, tax credits are different from tax deductions. While deductions lower your taxable income, tax credits reduce your tax bill directly. Imagine deductions as a discount on the items in your grocery cart, while credits are a coupon used at checkout. With a solid understanding of how tax credits work, we can now explore who qualifies for them. Let's dive deeper into that in our next scene. Stay tuned. So, who's eligible for these magical tax credits? Well, the criteria for tax credit eligibility can vary significantly based on the type of credit. Some credits are income dependent, meaning they are only available to individuals and families with income levels below certain thresholds. For instance, the Earned Income Tax Credit, or EITC, is primarily aimed at low to moderate income working people, with the amount of the credit varying based on income and the number of children in the family. Now, let's talk about family size. Some tax credits, like the child tax credit, are directly tied to family size. This credit provides a significant tax break for each child under 17 in a taxpayer's household. So, the larger the family, the larger the potential credit. But it's not just about income levels and family size. Some tax credits are linked to specific expenses. The American Opportunity Tax Credit, for example, provides a credit for qualified education expenses for the first 4 years of higher education. So if you're a student or are supporting a student, this could be a credit worth exploring. There are also credits for specific situations, like the adoption credit for those who have incurred expenses while adopting a child, or the residential energy efficient property credit for homeowners who've installed solar, wind, or geothermal energy equipment in their homes. And let's not forget about businesses. They too can qualify for various tax credits. For instance, the Work Opportunity Tax Credit benefits businesses that hire individuals from certain targeted groups that have faced significant barriers to employment. It's important to remember that tax credits are subject to change, and the criteria for eligibility can shift from year to year. Therefore, it's always a good idea to consult with a tax professional or visit the IRS website to get the most current information. By now, you should have a clearer picture of whether you're eligible for tax credits. Let's cap off with some key points about tax credits. As we've journeyed through the world of tax credits, we've gleaned some crucial takeaways that can transform your tax filing experience. Firstly, tax credits are not the same as tax deductions. While deductions reduce your taxable income, tax credits directly slash your tax liability, dollar for dollar. It's like having a gift card for your taxes. This distinction is vital because a tax credit can potentially have a much larger impact on your tax bill than a deduction of the same amount. Secondly, tax credits come in two flavors, refundable and non-refundable. Refundable tax credits can give you a refund even if it's more than your total tax bill. Non-refundable credits, on the other hand, can reduce your tax liability to zero, but not below that. They're like a one-way street, only leading to less tax, not a refund. Third, tax credits are usually designed to incentivize certain behaviors or to provide relief to taxpayers in specific situations. This can range from credits for investing in renewable energy to those for taking care of dependents. It's like a pat on the back from the government for doing something they appreciate or a helping hand when you're in a tough spot. Lastly, who qualifies for tax credits? There's no one-size-fits-all answer to this. Each tax credit comes with its own set of eligibility criteria. Some are income-based, some are expense-based, and others depend on your specific life situation. It's like a puzzle, and you need to find the pieces that fit your scenario. So there you have it. The essentials of tax credits in a nutshell. These points serve as a compass, guiding you on your journey through the vast landscape of tax credits. They are not exhaustive, but they give you a solid foundation on which to build your understanding. Remember, understanding tax credits can mean more money in your pocket come tax season, so it's worth taking the time to learn about them.